Can everyone hear me?
Yep.
Yeah.
Excellent. So for now, we're just going to go through a really quick run of show. Can you hear me clearly?
Yeah, we can hear you.
Okay, thank you. So the official program, which will be broadcast nationally and globally in China to last year, it was over 80 locations, will begin in around 3 minutes. So in the meantime, just here to welcome everyone, and we're going to listen to Ray Dalio speak with the National Committee on U.S.-China Relations, who of course brought us ping pong diplomacy and started to really build the initial bridge between the U.S. and China back with the Nixon and Kissinger detente in 1972, and has played an incredibly important role ever since then. And then at 6 p.m. Mountain Standard Time, we will welcome William McCahill, our honored guest, who is former Chargé d'Affaires, the Deputy Chief of Mission, the #2 after Ambassador Sasser during the 90s at the U.S. Embassy in Beijing, and has worked for a number of financial firms, and is now a senior resident fellow at the Bureau of East Asian Economic Analysis. So Bill will be joining us, and I'll give a quick introduction from about 6 to 6:10, followed by Bill will give a talk, and then we'll open it up for questions and answers. Can everyone hear me?
Yes.
Excellent. So as you notice so we ask people to keep their mics muted until then. And if you look in the chat box, I've put some instructions. So starting when the actual Q&A begins, there will be some opportunity, I believe, in the national broadcast, and they will give directions in a minute when it begins about how that will work. But in the local broadcast, we'll start around 6:25 to 6:30. If you'd like to ask a question, please type in the chat window, question from your name. Then type your question, and we will take unique questions in the order asked. So we'll look for questions that are fairly unique. Of course, it looks like we're going to have a large number of people. We're already up to 37. And we really look forward to questions. I cannot emphasize the depth and breadth and incredible personal knowledge of U.S.-China affairs that Bill McCahill has. So we're looking forward to an exciting program. And first we'll hear from Bridgewater founder Ray Dalio. We'll be starting at 5 p.m. So I'm going to get my screen ready, and I'm going to share it through a screen share. One other thing is I've put the link to the actual live stream. It's www.ncusr.org content live stream. That's in the chat window. If for some reason you're not able to hear it through my live stream, oh, welcome, Dean Bannister as well. Honored to have you. We'll be starting in about 1 minute with the national broadcast, and then starting with the local broadcast at 6 p.m. And then we will move on to questions. If you have any technical questions, as I also said in the chat, please send a private message to Tingyu Zhang or to Will Jensen, who are our co-hosts. So with no further ado, let's get the national broadcast up and running. Can everyone hear that okay? Can you hear the classical music? Okay, fantastic. Is it too loud, or is that okay?
Good evening, good afternoon, and good morning to all. I'm Steve Orlins, the president of the National Committee on U.S.-China Relations, and am pleased to welcome audiences from 78 partner organizations in the United States and 4 partners in China, as well as individuals from around the world, to the National Committee's 14th annual China Town Hall. Today's program comes at a critical time in U.S.-China relations. With the election of a new president, both countries have the ability to improve the relationship for the benefit of both peoples. Sino-American relations has a profound impact on communities across our country, so we hope that the issues raised during our program today will spark an educated and lively discussion at your local town hall conversations. In view of the importance of these issues to the future of America, the National Committee has adapted the format of China Town Hall this year, expanding from a single night into a multi-night series of programming to address the range of issues confronting the relationship. After tonight's keynote, we will host subsequent evenings on economics and trade, climate and health, and society and culture. In addition, a 5th Mandarin language event will be held for our Chinese-speaking audiences in the United States, China, and around the world. We hope you can join us for those nights as well. Information can be found on our website at ncuscr.org/CTH. As the president-elect formulates policies towards China and the rest of the world, we need to have a full and frank discussion of where American interests lie. So we are thrilled to welcome Ray Dalio as keynote speaker at China Town Hall. Ray is the founder, co-chief investment officer, and co-chairman of Bridgewater Associates, the largest hedge fund in the world. He's the author of New York Times bestseller, Principles, Life and Work, and the upcoming The Changing World Order, Why Nations Succeed and Fail, which I just had the pleasure of completing and is a must-read and will be released this winter. With over 35 years of business, personal, and philanthropic engagement with China, he offers special insights into China and U.S.-China relations. I'd like to thank our partners at all 82 venues across the United States and China who have transitioned seamlessly in this virtual world to bring this year's China Town Hall conversation to their local communities. Let me thank our speakers, a veritable who's who of U.S.-China relations. We also want to thank the Henry Luce Foundation for their support in funding China Town Hall. Finally, let me thank our dedicated staff at the National Committee for putting this program together. Thanks to all who have submitted questions in advance and throughout the webcast. We encourage you to join the conversation on social media using the hashtag CTH2020 and tagging @NCUSCR. Without any further ado, I'd like to turn it over to Ray Dalio for his keynote remarks. Ray?
Well, thank you, Steve, for inviting me to share my thoughts with you and others during this most remarkable time for China, for the United States, and for our relationship. Before describing what this time looks like to me, I would like to share with you a bit of my background, which affects my biases, maybe. My perspective is influenced by being a global macro investor for over 50 years and having a lot of contact with Chinese economy, its markets, and its senior policymakers who are responsible for the economy and the markets. In my job, I've followed all major economies over those 50 years, looking at the big drivers of their economic performances to bet on how well these countries and their markets would do. In 1984, I was first invited to China by CITIC, which was the only window company at the time. I mean, basically that meant that it was closed to the rest of the world, and CITIC, which was formed by a capitalist, first capitalist, Deng Xiaoping appointed him, was allowed to look at the outside world and learn from it. And so I was invited to teach them about the financial markets. That began the relationship. 5 years later, in 1989, my friends at CITIC introduced me to 7 young, great people who were called the Securities Exchange Executive Council, which was a group of 7 people, which was put together for the purpose of making the first stock market in China since after liberation. And there was no money then, really, and they were in a dingy hotel, and these great people made the first stock market. And my relations continued, and along the way, I had contact with all sorts of people, including very common people, because my son went to an all-Chinese school there when he was 11, and eventually formed and ran a foundation for 12 years that helped special needs orphans in China. And that brought me to all sorts of China and all sorts of people in China. And that affected my perspective of China. In the 36 years since I first went to China, I've seen China's per capita incomes increase by 25 times, life expectancy increase by an average of 10 years, and the average number of years of education increase by about 80%. I saw capitalism develop and flourish, and the capital markets develop and open up. I saw how the Chinese stock and bond markets became the second largest in the world. I saw how close these things, I saw up close how these things happen. I also saw how China became much more welcoming to foreign investors. For example, while in 2015, only 1% of the markets in China were accessible to foreign investors, now over 60% are available to them. Because investing is a matter of finding relative attractiveness, I make comparisons, and comparisons are important. And simultaneously with my watching China evolve, I watched the United States evolve in ways that concern me. For example, the creating of a lot of debt and the printing of a lot of money, which in history was a threat to reserve currencies. And that prompted me to study the rises and declines of reserve currency empires over the last 500 years. The chart I'm showing you here goes back 500 years, and it shows the major empires during that time. This is an aggregate measure of power made up of 8 other measures I'll explain in a second. But the blue line is the US and the red line is China. I think it pretty much speaks for itself in terms of that progression of Chinese power in many ways. That power index is made up of 8 gauges of powers, which have been shown to be the most important. These are the powers of education, innovation and technology, competitiveness in world markets, share of world trade, economic output, military, and the strength of the financial sector and the reserve currency. This next slide shows each of these power indices for the United States and China. They pretty much speak for themselves. I won't take you through them. We don't have time, but you get the idea. But I would like to draw your attention to the 2 that are lagging the other measures of power in China. They are the power of the reserve currency and the power of the financial markets and the financial sector. These powers traditionally lag other powers, but inevitably catch up. In studying history, I saw that all leading trading empires over the last 500 years had the world's reserve currency and the world's financial centers. During the 1600s and the 1700s, the Dutch guilder became the world's reserve currency, and Amsterdam became the world's financial center after what we now call Holland became the world's largest trading country. In the 1700s and the 1800s, the British pound became the world's reserve currency, and London became the world's financial center. And after the British Empire became the world's largest trading country. And in the 20th century, up until now, the United States dollar became the world's reserve currency, and New York became the world's financial center after the U.S. became the world's largest trading country. China is now the world's largest trading country. I believe China is now evolving into that role. Even though China's shares of world trade and world GDP are comparable to the United States' share, the renminbi is less than 2% of global reserves, world trade invoicing, and cross-border lending. In contrast, the US dollar accounts for over 50% of global reserves and trade invoicing, and is around 60% of cross-border lending. I expect that to change as China moves to internationalize the renminbi and open up its capital account. China's capital markets are opening up to foreigners and non-Chinese investors who are underweighted in them. For example, though China accounts for now roughly 15% of world equity markets capitalization, it counts only for a couple of percent of global investors' portfolios. So I believe that this is a very special moment because simultaneously there will be the confluence of the rapid development of the Chinese capital markets, the opening up of these markets to foreign investors, the relative attractiveness of them, and the underweightedness of global investors in them. And this is happening when the fundamentals are undermining the US dollars. I believe that these developments are likely to lead to capital and knowledge inflows into China, and that will benefit the Chinese capital markets and more broadly benefit foreign investors and Chinese investors too. Because of how I see things and the contact there, I've been a chronic bull on China. People have accused me of being biased, naive, and in some cases unpatriotic. I think I'm just being objective. Maybe I'm missing some important things that this extremely well-informed audience can help me see. So I'm looking forward to our conversation, Steve.
That is a fabulous introduction and basically a statement about why your book is a must-read, because it really goes into a lot of those concepts in great detail. So it's fair to summarize to say that you're looking at America in relative decline versus China, and China at relative ascent. Is there something that the United States can or should do to kind of prevent that relative decline?
Well, it all comes back to those 8 basics, but let's put it into basics. You have all individuals, companies, and governments at the end of the day have to earn more than they spend, and they have to have a solid balance sheet of assets which are greater than liabilities. And you could see reverberate through the economy with this shock. Those who have those things are in good shape, and those who don't are in bad shape. That's true whether or not you print your currency or not. So what that means is you have to have either be able to be more productive, because we're running deficits in these regards, and now we're funding with debt which we're printing. Or so you have to raise your incomes, or you have to cut your expenditures. We're lucky to have the exorbitant privilege of the reserve currency, which allows us to do that, but we're testing the limits of that. The other things that successful empires have done over there is they have excellent broad education, and not education just in terms of subject matter, but the teaching of civility, of how people should be with each other. And by and large, they work in ways that can be competitive and inventive, but they're rowing in the same direction. And they're, as a result of that, pursuing the same missions, and they have a common dream. You know, we called it the American dream, let's say. I think we need an American dream, a dream of what are we going after that we can agree. I thought it was equal opportunity. I would believe in equal opportunity might be a good thing. But anyway, you have to have a common dream. You have to have metrics behind that common dream. And then you have to be pursuing it together. Those through history have been, the most key elements of countries' successes.
The reserve currency question. You have 50% of reserves held in dollars, 2% held in renminbi. It's much more than global trade. It's confidence in the currency. Since the renminbi is not truly convertible, what's going to happen in the future that's going to convince those that are holding reserves to be holding RMB?
Well, traditionally, you could see that there's the development of the RMB. By the way, I think it'll evolve over decades, but I think it'll evolve pretty quickly. There is the loss of confidence in the reserve currency, which drives people to see alternative storeholds of wealth. So, for example, when there's a debt issue, there are two ways of dealing with debt. There's hard money, traditionally backed by gold. And when that happened, then there was breakdowns in that monetary system, the valuation. So for example, classically, March 1933, Roosevelt, with the debt problem, was forced to go off the gold standard, printed a lot of money, devalued the dollar, and then it moved on. In 1971, we had the same. Nixon did the same thing, went off the gold standard, and devalued, and so on. And the creation of a lot of debt and money means that money goes someplace else, and it traditionally, both of those cases, it went into stocks, gold, and other places. So money is always the holders of money, which are the holders of bonds. Bonds are a promise to receive money, a lot of money over a period of time. It's a very long money position. And when those become unattractive, such as now, let's say, you get zero interest rate or close to zero interest rate or even a negative interest rate, and there's a lot of creation of debt and a lot of printing of money, that drives that into other assets. They may not be another currency if there's not a good currency. They may be stocks, they may be gold, and they may be another currency. But it is that kind of time that we're in. So next year and the year after, no matter what, we're going to have large deficits. We are going to produce a lot of debt, and we will monetize that debt, and that debt will have a negative real return, and therefore people will borrow in it, will find it more advantageous to borrow in it than own it, and then they will move to other assets. So that is one ingredient that's happening now, at the same time as another number of ingredients, the opening up of the
Don't we need convertibility? Don't we need convertibility in RMB?
No, you don't need capital flows. You don't need total convertibility. History.
How can you have confidence if you're sitting in a central bank in Japan or the EU or anywhere else if it's not ultimately convertible? You have an obligation to your people.
Oh, no. The convertibility, it depends on the nature of the convertibility, right? The capital account, by the way, is going to be opened. You're seeing now an opening up of the capital account. You will see. And you will also see more internationalization of the renminbi. But today, I'm an investor in Chinese capital markets. For the last couple of years, it's been, and I can safely bring my money in and out. And I have to, in making those decisions, decide what the relative risks are of one type of risk versus another type of risk. Any country, including the United States, can establish capital controls. And there's a risk that countries do.
China does have capital controls. One is theoretical, one is actual.
But the degree of capital controls, as an investor who brings international money in and out of there, some onshore, some linked because of the links that they've created in Hong Kong for Hong Kong markets and so on, I can get in various ways those types of exposures, both onshore and offshore, in a way that allows me to put my money in and take my money out. I can do that. So it's not an impediment. As a professional investor who's doing this, I can guarantee you it's not an impediment. And so in making those choices, now I recognize that at any time that could be closed and you might have issues and so on, just like I recognize, it's a risk here, but one has to weigh those risks, because in weighing those risks, to be absent the Chinese capital markets is very risky. Because if you're looking at this almost as being, think of it just as diversification. There's the United States and there's China, and basically those are the two big economies. If you're dealing with industries of the future, technology, and so on, to be heavily weighted, entirely weighted almost, in the countries that are the older, the reserve currency countries, the United States, Europe and Japan, and you look at those older, more indebted countries that are having problems with monetary policy because they have to produce a lot of debt and produce a lot of money to do that, and to not be in China is, to me, in my opinion, risky. So I feel that I have to have a diversification, and I compare those risks. So none of the risks are zero. It's just a matter of assessing that. And I can tell you, that market, that foreign investors are moving in, and the Chinese are doing things to build confidence. They can undermine it, but I think that the diversification benefits outweigh the risks.
Did the delay of the Ant IPO affect that whole concept?
No, it's such a good example that Westerners, I think, are like on their edges of the seats, and they pay so much attention to the one development. We're almost like news-hungry people. What's today's development? And they don't pay attention to the evolution. I've had a lot of dealings with Chinese financial regulators, and I could say that generally speaking, no, not generally speaking, almost always speaking, I found them to be reasonable, caring, and highly informed people who are now in an environment which is changing at an extremely fast pace, and that there's a risk of being too loose or too tight, particularly on new types of investment. The Ant is a whole new concept, innovative concept, in terms of banking, and almost could replace or threaten the banking system in China. And it hasn't yet been properly established in terms of regulatory review and the like. And so that's an element. And of course, it's important to be clear that what we have in China is state capitalism. So state is going to control those things. But I've watched in the United States, in terms of regulatory authorities, struggle to try to get the balance between freedom of what is being done and restrictions on what is being done right. We had the financial crisis in the United States because they were too liberal in terms of controlling some of the things that were being done. There's always a wrestling match on that. And I think Ant got ahead of that. It's up to one to interpret that. But anyway, it's the regulatory authorities to decide that. And then, so I think it was progressing too fast. And it had to be clear as to who the authority was.
At one point in my life, I was an investment banker who did IPOs. If 3 days before an IPO, the deal was pulled, wow, that probably would have been the end of my career at that point. That's you were not in good contact with the regulators if that happened.
China is not the same. We can't judge China by the same exact standards in the same ways. And I think that people could make the mistake of mistaking imperfections for the changes in the directions. As I'm saying, if you look at the directions and you look at what's going on, those are the trends and those are the forces about the big things that I think that are going on.
I mean, one could make a strong argument that if you compare the language of the third plenum of the 18th Party Congress, which was in 2013, to the 2 weeks ago, the fifth plenum of the 19th Party Congress, with respect to state participation in the economy, it's really quite starkly different. And a lot of the Chinese miracle that you have witnessed in your 36 years, and I've witnessed in my 41 years in China, is based upon the private sector. And is the miracle going to continue if the state is playing such a major role?
I think it's important to understand, to know the people and to understand the intentions and then interpret the actions in light of those particular intentions. I think a lot of foreigners may misunderstand that the very strong reform policies that we've seen pervasively at an extremely fast pace are also happening at a time when there's not going to be total or unleashed state-owned enterprises, because there's certain benefits. So I see they're wrestling with the question of what should be a state-owned enterprise and what shouldn't be a state-owned enterprise. Is that a strategic enterprise? Should that be a public-private partnership? Should it bring in equity? And so the desire to corporatize or privatize or whatever a lot of state-owned enterprises, and at the same time to keep them also, many of them, controlled. Let's remember that this is a socialist capitalist economy, and that when matters of employment are entered into there and direction, everything is not a free market society. In the United States, it's almost entirely a free market. That has good and bad things. Sometimes it's difficult to get resources to where the resources should go. Sometimes in education, whatever, in building infrastructure, building roads is a challenge in the United States. There are pros and cons. But in this state capitalist type of system, there will be those types of controls and directions. I think it would be a mistake to say that the privatization, let's call it, of state-owned enterprises in China is not happening the way we capitalists would like, to mistake that to being that China is not producing capitalist type of things like the development of capital markets, the increase in efficiencies. I mean, we could just look at the results. You know, we could look at how the COVID was handled, how their economy is handled, and so on. If we're so hung up on getting it exactly that way, we might miss the bigger things that are going on.
Well, you know, I would argue that the returns on state-owned capital versus private capital are much, much lower, and ultimately they will have to pay a price for that.
But that's up to investors. Have the beauty of being able to decide whether they want to go into or not want to go into those enterprises. But yeah, you must agree that there's a plethora of wonderful companies that this year we'll probably have something like 40% of the IPOs be China in the world, big IPOs, be Chinese companies on Chinese markets. Anyway, a lot of them will be Chinese companies on Chinese markets. And we as investors have to decide whether we want to go to those companies in those markets or not. And so there's a lot there to offer, while you might choose to stay clear of the state-owned enterprises if you like.
Great. Well, let's go to our first audience question from Jasmine Fan at BlackRock.
Hello, my name is Jasmine Fan from New York. And my question is, how do you think American investment companies should position themselves in the world of US-China decoupling, but also to consider opportunities in the gradual opening of China's financial market? Thank you.
Thank you for your question. I think the world is changing in very profound ways. And I think that sometimes when we look at it up close, we can miss the big pictures of change. And that it is changing where China is really gaining its stride. And anyway, it will be a competitive power. So I think that investors and investment managers have a responsibility to know China well, be there, and make investments there as they must. I'm a global macro investor, so I have to be in all the major markets and assess those. And I think that diversification and being there and being aware so that you have an intimacy of understanding of what's going on in China and make those choices from that intimate, up close perspective, I think is required.
If you're roughly at 3% now and you're saying a neutral weighting would be 15%, how long do you think it'll take for international investors to move to that weighting? How many years?
Well, by the way, that 15% is also growing at a fast pace. So I expect the 15% will grow, and I expect that the 15%, so the 15% will grow and the share of that will grow. I would expect, I can't tell you, how fast, but I would say maybe, something in the vicinity of a 30 to 50% growth rate, and that probably more.
Annual.
Yeah.
Yeah. What is central bank digital currency going to play a role in this now that it's begun to be rolled out in China?
Let me explain digital currencies for a second globally. There are two purposes of an exchange rate and of a currency, and that is as a medium of exchange and a storehold of wealth. So there's the digitalizing of the clearing system. No central bank, I believe, is going to allow an alternative currency to gain strength, such as a Bitcoin type of currency and so on. The power of having your own currency and being able to print your own money is an enormous power, and I don't think that you will see anything like that. But the digitalization is not only efficient from a transaction point of view, it helps to minimize the risks of the existing clearing system, which is fairly heavily influenced by the United States. Some of our sanctions, a lot of our sanctions, as you might understand, which probably sanctions are our greatest power, the United States' greatest power, happen by influencing through sanctions currency movements through the SWIFT clearing system and the like. Digitalization helps to reduce those risks. So that's what's going on with digitalization, and I expect that it will be it'll be successful.
Even though Ali and Tencent already had what was in effect digital payment systems. Again, is this a question of the state participating where the private sector was already in it?
This is the government digitalizing the currency, offering a digitalized version of the currency.
Let's go to the next video question from Corey Cooper, Columbia Law School, Black Voices on Greater China.
Hello, my name is Corey Cooper. I'll be attending the China Town Hall keynote program with Ray Dalio online. My question has to do with the future of U.S.-China business relations. General Secretary Xi Jinping recently gave a foreign business-friendly speech at the 3rd China International Import Expo. However, given President Trump's propensity for blaming China when questioned about the U.S. economy and the desire of some officials in his administration to demonstrate their, quote, tough on China, I wonder what your thoughts are on how likely it is that business relations could actually deteriorate rather than improve further between now and January 20th, when Trump officially leaves office. Thank you.
Well, there's the question of the conflicts, and then there's the date. Both are embedded in that question, I think. There are 5 types of conflicts that exist with the rising power challenging an existing power. They are, and we call them wars. There's a trade war. There's a technology war. There is a geopolitical war. There is a capital war. And then there is a military, let's call it competition, that, you know, could conceivably be into a military war. They're all connected, and and because of the threats of those, we are having decoupling taking place, and which means the building of sort of self-sufficiency, and so that is going to be with us for a long time, and how those conflicts are handled will matter a lot. As far as the Trump moves between now and the end of the year regarding any actions with China, I wouldn't expect, my own guess is that there wouldn't be any big developments that would be traumatic or surprising in either side. But, you know, I'm not the geopolitical expert who should be offering those comments as well as other people here. But by speaking to many of those, I would say I wouldn't expect between now and January 20th a significant developments in Chinese-American relations pertaining to the things you're asking about.
Yeah, we have to hope not, though there were additional sanctions put on people in Hong Kong last night by Secretary Pompeo. Let's go, you mentioned technology. Let's go to a question on technology from Nick Young in San Francisco.
Hi everyone, this is Nick Young in San Francisco. As the U.S.-China tech war intensifies, both countries are pursuing separate models of global cyber governance with distinct values and ecosystems. China may have initiated this process when it blocked Facebook, Twitter, and Google more than a decade ago, but now the United States has retaliated by issuing executive orders banning TikTok and WeChat. With no positive turn in sight, what would a technology decoupling look like, and what would be the consequences?
The technology decoupling, of course, there's so many technologies and so many applications, but let's say at the big picture level, it certainly reduces the pace of development, and it puts entities who are trying to juggle both, you know, sort of on edge. It means, in my opinion, it sets back development, particularly in the United States in some ways. In China, let's deal with that privacy issue. It is technologically a fact that the more data you have, and the more artificial intelligence is applied to that data, the better you can understand and manage things. So from a competitive point of view, I think it's a desirable thing to have the kind of massive collection of data. I've heard just different numbers, 8 times as much data per person and so on. And of course, the other side of that is the privacy side. Each person comes down where they want, what is the benefit of that privacy. In China, most people view that as something, that absence of privacy is something that brings about better security and a more civil society. In the United States, we value personal privacy issues. I'm not going to get into that, but from an efficiency point of view, it's contrary to efficiency when those technologies are decoupled. And it also is somewhat of a disadvantage technologically to have more holding of data private than to use it in a broader way.
Raises the question of reciprocity, though, that Facebook, Google, YouTube, Twitter have been blocked in China for a number of years now, and WeChat and TikTok and other Chinese social media apps are able to operate in the United States. How do we resolve that question? In other words, there's a sense, and I heard this a lot from the Trump administration. I oppose the WeChat and TikTok bans in the United States. However, the response from the Trump administration is it's not fair because we can't operate similarly in China.
I think everybody has to look at what the bigger picture. What are the most important things in each country that'll be lines that won't be able to be compromised, and they're different things in different countries. So you're not going to get equal approaches, or for example, the privacy issue and Google and so on developing in China has to do with how information is managed in China, that is managed in a way that's different from how it's managed in the United States. And so reciprocity is not going to be something that you can develop policies on. We're going to have the same reciprocity. You could use them as negotiating. So I think you have to look at what are the most important things in China, and there's a certain government approach that doesn't have that same free flow of information, particularly foreigners. However, there's an economic component of it too. Some countries are more protectionist in some ways than other countries. So those are matters of negotiation, but they can't be approached like that we can demand reciprocity with matters that are not equal. For example, the big issue for the Biden administration is the human rights issue. That issue is going to be then dealt with a sovereignty question in China. China would view a human rights question as a sovereignty question. Should countries operating outside some of this jurisdiction assess and judge and exert pressure on how they should deal with domestic affairs and so on. So how will that work out? There'll probably be a whole lot of arguing about that, and then it'll come down to who has what power. At the end of the day, this whole thing's going to come down to who has what power. And that's why I think in the United States, the most important thing is focusing on how we can get stronger. But anyway, those issues won't be resolved by expecting, well, we do it and then they'll do it too.
See, that the problem we have, because we're dealing, obviously I'm dealing with the Congress, dealing hopefully with the new Biden administration, is when there are violations of what are universal values. This isn't a question, that it becomes extremely difficult to persuade the Congress, the American people, that we should even be dealing with them on a lot of these issues. So when you talk about reciprocity, people just go, well, it's just not fair. It's just not fair. We shouldn't be allowing that. And the argument the Chinese make with respect to Facebook, Google, YouTube, Twitter, actually doesn't hold water. It's exactly what you said in the second part. It's protectionist. It's economic protectionism. It's not truly national security. And if China is not willing to enter into discussions on these kinds of issues, it's going to be really tough to get to a constructive relationship.
Well, I think the problem is that different people have different views about what is fair. And in the reality of world affairs is that those interpretations don't matter really much in international relations, maybe unfortunately, but maybe fortunately, because if different people have different views of what's fair, maybe you can't get there. And the only thing that really matters are relative strengths, relative powers, because it's a negotiating thing. And so, you know, it's very interesting in the history. The United States, really starting under Woodrow Wilson, was the first country in history to view that the relationships between countries should be analogous to the relationships that we want to have between people within countries. In other words, he viewed that the United States as a democracy, and that the way people should be with each other should be a model for world governance. And that's why he formed the League of Nations, and the League of Nations failed, and the United Nations failed and after it. So there's not a world organization, there's not a world court to adjudicate differences. So, for example, if you say that you know, the world wants let's say that human rights issue and so on, I would suppose if the world signed an agreement and agreed by and had enforceability so that they were that, then you could bring them to the world court and resolve that. Let's say on the issue of WTO, China brought issues of WTO to the WTO, and certain things were decided in its favor, certain things are decided against it, but the WTO is not a governing institution. And it doesn't work. And neither does the United Nations. And because power is where it comes down to. So Americans have gotten comfortably used to having their way and deciding that, okay, that's fair, that's not fair, and so on, as an extension of the power that we had as a result of, you know, in 1945, we created a new world order, the American world order, and we had power, economic and military power. And so we really got to judge others and determine what was fair. I think that, you know, we're not going to be able to resolve that. And if we keep looking at it that way, we may not get what we want. I think we have to look at it realistically.
I think the Biden administration is going to look at building coalitions. And to the extent that a country is perceived as a violator of international law, it will be much easier to build the coalition against the behavior that was a violation of international law. If you look at the ruling under the Convention of the Law of the Sea, which was against China in favor of the Philippines, it put a lot of pressure on China to modify its behavior because it does not want to be perceived as a violator of international law by other countries, especially by the ASEAN countries who were involved. So let's go to some of the cooperative aspects of the relationship. A question on climate and health from Benji Renton.
Hi there, my name's Benji Renton, and I'll be attending China Town Hall in Middlebury, Vermont this year. And my question is, what do you see as the most important area for the US and China to collaborate on science and research? And how can these two superpowers learn from COVID-19 and work together to prevent the next pandemic?
Well, I think that's a great question, and there's tremendous opportunity for cooperation. And, you know, it almost goes back to ping pong diplomacy, but the idea of dealing with climate change, that's a common interest. not only this pandemic, but global health issues. Just the reestablishing communications and looking for areas of cooperation, I think would go a long way to improving the psychology and demonstrating the win-win potential of those relationships.
Let's go on to society and culture. The committee's been doing a lot of programming on kind of anti-Asian bias in the United States, and you've written extensively about a persistent anti-China bias. Many of these subtle prejudices have come out in the open in the past year. How pernicious do you think this threat is, and how do you become more empathetic with our cultural differences and yet hold firm to our values?
Again, I'm like a mechanic, I don't have an ideology pertaining to this, I'm just a mechanic. Anger traditionally comes, racism, demonization across classes comes during periods of economic distress. And so we see it here in the United States. Number of statistics that can show is that the majority of Republicans and the majority of Democrats actually hate the other side. And so whether that's rich, poor, racial, geographic, all of those prejudices sort of come out, particularly then if you have an opponent. The idea of demonizing the other side in pursuit of good versus evil is the way that normally happens. So we're seeing that happen. Now, what does that mean? I mean, I don't think it's a good thing. I think it's, understanding, having contact with each other. It does a world of good in all of those cases for, the communications, understanding. It helps people understand each other. But I don't think what can be done. I think whatever propaganda or views are largely going to be extended by the leadership and the media. It's quite often the case that when a country has problems, they try to bring it together by finding an enemy on the outside. It would go a long way if President Biden said something nice about China and the Chinese, or the potential of working together, and it would be very nice if President Xi reciprocated and they took some actions along those lines, and then there would be, hopefully a change in the meme in terms of those kinds of things. But it's a symptom of our times, I think.
Yeah, I fully expect the Biden administration to take action against anti-Asian bias, that they will make statements, they'll revise visa policies that relate to really ethnicity, they'll end the Muslim ban, they'll revise visa policy towards Chinese students, they'll revise H-1B policies. I expect that they will do that because they've really, I think the Asian American community came out strongly for President-elect Biden.
At the same time, I expect that'll be the case, and I hope so. At the same time, these deep-seated prejudices about even the scenarios that are underway are, there's a percentage of a population, a large percentage, that nurtures those.
Yeah, and I think we need to, transparency and light is a great disinfectant, and we need to make sure that, that does not shape the formulation of American policy.
I'm with you. The challenge, though, on that is also the media. The media, when put together with politics, You know, it's nice for us to say, but it's difficult to get that kind of light shown on.
Yeah, I mean, I think the media is actually pretty good in this respect. You know, and we've seen the media, you know, a Chinese American correspondent working for CBS called out in a White House press conference in what to me was one of the more shocking events over the last 4 years. Let's go to a question from Blake Moss in Kentucky.
My name is Blake Moss and I'm from Lawrenceburg, Kentucky. My question is, why should people from small towns in Kentucky and other places across the South even care about U.S.-China relations? How does it affect them in their daily lives? Thank you for taking my question.
Good question. It affects you certainly economically. A lot of the goods that you buy at relatively low prices have been produced in China, and so that affects you in that way economically. And of course, their competition has affected jobs, certain types of jobs that have moved to China and that have left the United States. And so that has an effect on you. And then, of course, what happens to our money, the value of our money, its purchasing power, is affected by what happens in the United States and what happens in China. And then, of course, then there's this great geopolitical struggle, which might or might not affect you, depending on, you know, what transpires. You know, hopefully that won't affect you, and so you'll hear about all the struggles in the South China Seas and so on, and maybe that won't matter. But the technologies you use, the cost of the goods that you have to buy, the jobs and so on, are affected by a lot by Chinese-American relations.
Is it fair to conclude, Ray, that you think the greatest enemy of America is itself and the greatest enemy of China is itself?
Yes.
And if so, kind of give us a sense of why and what that means for policies.
Well, because all of this is a natural extension of strength and well-being. And so those 8 measures that I mentioned before are the fundamental underpinnings of strength, you know, the quality and extensiveness of education, the civility of the people, then the development of resource allocation systems, such as our capital markets allocation system, our ability to produce things at competitive rates, our ability to then earn more than we spend, these kinds, and the development of a military that keeps you strong and protects you, all of those things, those fundamental strengths through all history, through all time, have been most important in determining the well-being of countries. And so we rise and decline based on those. So, for example, if we threaten the reserve currency status, let's say, nowadays we're going to have to produce a lot of debt. I go through the calculations. Who will buy that debt? Americans don't have enough capacity to buy that debt, all that debt. They have to sell it to others outside the world, the outside world. Those others already own too much of it, and they're a little bit worried about what the return on that's going to be. Americans, even on bonds, pension funds, endowments, don't think that bonds are going to give them the returns that they need in order to be successful. If you don't buy the bonds and so on, then you're going to have to not buy more than you can afford to buy and all of that. So these basic fundamental underpinnings are what makes a place strong, competitive in the world, makes a currency strong and competitive in the world to encounter others in the world. That's just basic.
We're out of time, so let me just close with a question which Chinese media and American media ask me all the time, which is, Are you pessimistic or optimistic about the future of U.S.-China relations?
I'm more optimistic than pessimistic. It won't come the exact way that I would want it to come. And I guess it depends, on how long it'll be. But I think if both countries are allowed to evolve, albeit with the risks, then it'll be fine. The Thucydides trap example is a good example. In the last 500 years, there were 16 times where a rising power challenged an existing power. In 12 of those times, they had military wars. That would be a disaster. And in 4 of those times, they didn't. If we can look at those times that they didn't and the need for overwhelming and recognize and remember history, remember how terrible those are and how good win-win relationships are, and we can evolve without those kinds of things, which I think is most likely, it's the most sensible thing to do, then we will both evolve, we'll evolve, and we'll evolve together, probably with arguments, but it'll be okay. That is an optimistic scenario for me.
And I very much hope the Biden administration hears that and we can work towards achieving the optimistic scenario. My answer is always, it depends on what the Chinese government does, it depends on what the U.S. government does, and it depends on the people-to-people relationships that are so strong and hopefully will get stronger. Thank you, Ray, for such a wonderful, thoughtful, thought-provoking conversation. And thank you all in the audience for participating in the first night of the National Committee's 2020 China Town Hall Series. We hope you will also join us for the rest of our China Town Hall programming, with our next program coming up on Thursday. More information, including program registration, can be found on our website at ncuscr.org/CTH. Thank you again for joining us and have a wonderful day.
And we'll make the transition now. Okay, hello everyone. Can everyone hear me? Is the sound coming through?
Yes.
Okay, thank you. Community, honored guests, students, faculty, and friends, thank you so much for joining us today at the 5th Annual Idaho-U.S China Town Hall, co-sponsored by Boise State University's College of Business Economics, and of course, the National Committee on U.S.-China Relations, who we just heard from. We're very, very honored to have William McCahill with us today, who will be speaking soon. And we have a lot of great things to talk about, particularly in light of what we just heard from Ray Dalio and the National Committee. First of all, we have some of the ground rules we'd like to follow. We've done this in person before, so this is our first time trying this format. So we're hoping that this will be a success. I'm going to talk for a few minutes and then we're going to turn it over to Bill McCahill. When you have questions, which will start at around 6:25, please say what your name is and type your question out, and then we will call on you directly. So a few remarks I'd like to make just to start is we're in an era of great change in U.S.-China relations. There is so much going on, and we'd like to focus in a little bit on the Pacific Northwest in that role. For those of you who are able to attend our China Town Hall last year, we had a theme from potato chips to microchips, really focusing on the impact of U.S.-China relations. And this was when the trade war was the big news, right? This was pre-COVID, and the election was still quite a ways off a year ago. But we're honored to have Bill here with us tonight, who has been based in Seattle for the past few years. So we're expanding this focus to really think about how this takes a sort of a regional focus as well. So of course, if we talk about Idaho, we have companies like Micron, of course. We have Simplot on the ag side. We have AgriBeef, but expanding it into the Pacific Northwest, we really start to take on a significant portion of the economic relationship and the technological relationship, which was referred to a little bit in the first part with Microsoft, Intel, Amazon, Boeing, and on the ag side, where is how I actually first met Bill. I'll get to in a minute. We have Washington apples and Oregon crabs and lots of interesting products. But the tariff war has not been resolved by any means. An interesting thing to localize is some of the big business news in Idaho in the past few months was Cradlepoint's acquisition by Ericsson, a Swedish company, in September for $1.2 billion. And shortly after that, Sweden really sort of cracking down and coming out with some very strict policies about how they wanted to approach 5G, which was at the heart of this acquisition, and Huawei. So we've got plenty to talk about, and of course, we're happy to talk about anything which Ray discussed earlier. So an introduction to William McCahill. William McCahill is a senior resident fellow at the National Bureau of Asian Research. In the past, he's had senior roles founding law firms, founding consulting firms, as a major advisor also to many hedge funds and other financial institutions. And all of this was following an incredibly successful and prestigious 25-year career at the State Department. Bill had posts in Hong Kong, Taiwan, Beijing, Western Europe, Scandinavia, Canada. And when I met him for the first time back in 1997, I was what my little boys like to call a real noob in the U.S. Agricultural Trade Office in Shanghai. So I was many levels below Bill, who is the Chargé d'Affaires, or the Deputy Chief of Mission, #2 after Ambassador Sasser. And I'd sort of watch him at a distance in awe. And before we turn this over to Bill, I'd just like to recount when President Bill Clinton came to visit China in 1998. It was a big affair, and all of us working throughout the entire diplomatic mission were sort of pulled off of what we were working on and pulled into this. And that's when I really got to see Bill in action. And I was amazed with his depth of knowledge of Chinese history, of 中国语言顾问, traditional Chinese, which he's sent some excellent traditional Chinese messages to me getting ready for this chat. But not only that, his incredible on-the-ground understanding of the dynamics, the issues at stake, and deep insights and relationships with some of the core players. I was absolutely blown away. And we were reintroduced last year at where he chaired a dinner for the Boise Committee on Foreign Relations. And I recall our conversation we had then. We talked about some of the more optimistic times back in the 1990s. And obviously, I think we've hit some headwinds since then. So I said, when you ask your questions, I think, one of the things to keep in mind is, what is this relationship going to look like 5 years from now, 10 years from now, 50 years from now? It's really at the centerpiece of the world. So with no further ado, we'd like to turn it over to Bill, and we'll have a big virtual round of applause.
Great. Thanks very much, Jack. Can you hear me?
Yes. Can everyone hear Bill?
Yeah. I'm trying to speak English for you, Jack. Anyway.
Can everyone hear? Okay, fantastic. Thanks, Bill.
Good. Well, you've stolen my thunder, but let's go on in any event. It's very nice to be back in Boise, even if we had to zoom into it. Last year, as Jack just said, when I spoke to the Boise Foreign Affairs Committee, it was at the Riverside Hotel. And the council, the committee there hosted me in the hotel. Was completely occupied by a convention of the American Dairy Goat Farmers Association. And that was very, very stiff competition for an old China hand like me. So luckily, although I like the goat cheese a lot, Zoom has eliminated that competition. On the other hand, Zoom has the added advantage, at least for Chinese intelligence, of having its back office staffed by the cyber experts of the People's Liberation Army Eastern Theater Command. And so, Wan Chang Hao, good evening, comrades. But the PLA will, of course, not only be collecting data on me tonight, they'll be keeping an eye on Professor Marr. Now, Jack himself, for all of his flattering of me, which of course will help him advance, Jack ranks really very, very high among the young, old China hands. And so I thank you once again for having invited me to this event. For those of you who are Jack's students, I think you're very lucky to be in such capable hands. Jack, for all of his flattering of my Chinese language, has his own full, often eloquent command of the language. And he brings to Boise really quite the priceless experience of actually having done business in China and of having represented businesses there, US businesses there, in Taiwan and in Japan through his US government experience. So it's a very, very rich package that he brings, and another 非常感谢 to Professor Marr. Now, even though I share with Professor Marr, I believe, certain Irish genes, I hope not to give you too much blarney tonight, and instead would rather have your questions direct to discussion, and I hope that there'll be lots of questions. I wasn't able to see all of Ray Dalio's presentation just now, and I suspect some of our views might differ. But I have read many of his recent op-eds and his interviews in the media, as well as the essays that he's publishing in a series entitled The Changing World Order. And I would recommend those to you. They're all available online. Those, I think, would give you a quite good sense of what his views are on China and how he puts that into a global sort of framework. But as you know, from tonight's invitation, the town hall has been split into two segments, with the first that just ended, aimed at more at a nationwide audience, and this part meant to discuss how US-China relations affect our local issues. So as Jack just said, for what I took local to mean our Pacific Northwest, 3 states of Idaho, Oregon, and Washington. But I wanted to focus on Idaho, actually, and its China economic connections. When you look at how relations with China affect our region, I think 2 themes come immediately to mind. One is interdependence, and the other is political risk. But to frame that discussion of our own region, let's start with current events in China. Last week, while the decadent and declining United States, as the Chinese leaders say we are, was distracting itself with elections, the Chinese Communist Party was celebrating the grand, triumphal, glorious, and innumerable splendid successes of the 5th plenary session of the 19th Central Committee, which had met just the week before. 5th plenum was really an event for the ages, the party media said, even if the Boise press didn't give it quite the same coverage that the Chinese communists had hoped for. Central Committee plenums happen once a year during the 5-year term of a Central Committee, with an extra plenum in the 1st year and in the 5th year. These are meetings of about 300 people, 95% or more of them are men, and they bring together the people who really run China. So 300 guys for 1.4 billion people. There's no need to waste time on elections. The Central Committee knows best, and its General Secretary Xi Jinping knows even better. In the party's view, this system demonstrates what they call the superiority of socialism with Chinese characteristics. So orderly, so efficient. Well, you can supply the adjective. So in keeping with the party traditions for these meetings, the 5th plenum at the end of October published an outline of what they want the party's economic and social programs to look like for the period running from 2021 through 2026. That will be the 14th of China's 5-year plans. This is a device that the Chinese inherited from the Soviet Union in 1951. The plan and all the detailed components and the government budgets and so on that will flow from it aim to make China a world leader in advanced technologies, self-reliant and thus free from dependence on the United States, and having a prosperous domestic economy. But beyond such explicitly economic goals, everything in the plenum outline, including the continued military buildup, the international infrastructure project of the Belt and Road Initiative, cultural production, whatever that means, aggressive overseas propaganda, and so on, has as its overriding goal to reclaim China's national greatness and to realize what Xi Jinping calls the China dream. Now, these Chinese ambitions put China into direct and continuing competition with the United States, with our allies and friends. And our Pacific Northwest region will feel that indeed we already have. So I mentioned two themes at the outset: our interdependence and political risk. Our interdependence with China can be seen clearly in our trade and investment flows. The political risks of our interdependence with China can be seen clearly in our trade and investment flows. While Idaho's trading volumes with China don't approach the volumes of Oregon and Washington, there's no Puget Sound ports or Boeing factories here, or there rather, the state's China trade is a very good microcosm of the region as a whole, with high tech at the one end and agricultural goods at the other. And the trends that in Idaho's trade with China over the past few years mirror very closely the trends that are seen in Oregon and Washington. Idaho's goods exports, products, commodities exported to China last year totaled $198 million. That sounds pretty impressive until you compare the number to 2018, when the goods exports were $401 million, or twice that. Or compare it to 2016, when the figure was 3 times that, 630 million. So the federal government hasn't yet completed its full 2020 statistics, and we still have another couple of months to go. But from the first 3 quarters data, it would appear that at the national level, agricultural commodity exports to China have increased slightly. This probably a result of the so-called Phase 1 trade agreement, while tech exports have decreased slightly and service exports have dropped off dramatically. Professor Marr might have the most up-to-date numbers, and as I said, he knows the Idaho economy far better than I do. And when he speaks of Idaho's exports to China, as he just did, he says that they run from potato chips to microchips. Well, in order of value, it's now actually more like microchips to potato chips. Semiconductors and components are Idaho's most important export to China, 23.7% of the total last year. Precision instruments accounted for another 15% of exports, and pharmaceutical products for 5.5%. So taken together, those 3 categories of high-tech exports were 44.2% of Idaho's exports, commodities exports to China last year. Agricultural products like dairy, vegetables, and melons, as the statistics jargon says, made up 21.5% of last year's exports. In other words, less than half of the high-tech stuff. All export sales mean jobs, of course. In Idaho last year recorded at least 3,100 jobs that were totally dependent on exports to China. But goods exports, you're in business schools, good exports tell you only half the story. The other half, of course, comes from exports of services. We don't yet have the full data, as I said, for this year's services exports to China, but they would appear to be on a downward path. And if you look even back to the 2018 numbers, which have been widely published, they give a pretty good snapshot of what those service exports are. In 2018, Idaho's export of travel services, tourism in other words, exports of travel service to China hit $56 million. Education services, namely tuition and other payments from Chinese students in Idaho, totaled $28 million. And royalties on intellectual property and trademark rights brought Idaho another $26.5 million. So to put those numbers in a nutshell, Idaho's economy depends in some good measure on the state's exports to China. And China's continued economic growth and the greatly improved diet that Chinese people enjoy depend on imports from Idaho. And so that's interdependence. But what happens when political risks hit that interdependence? Well, the trade statistics tell that part of the story too. Even though they might possibly tick back up this year, goods exports fell by more than half from 2018 to 2019. That's certainly one result of the tit-for-tat tariffs from the trade war. Although it's not clear from the numbers, but it's quite plausible, was that China was also using non-tariff barriers, such as those concerning animal or plant health, to limit their imports of Idaho agricultural goods. And it's certainly conceivable that Chinese theft of Idaho firms' intellectual property harms some high-tech exports. Chinese are experts and masters at using trade policies to retaliate against countries or companies with which they disagree, even if those have nothing to do with trade, the disagreements that is. In other words, trade policy flows from political decisions. And all of China's trading partners face this issue. We can see that playing out in real time in Australia, whereas anti-China sentiment has grown because of Chinese meddling in Australian media and politics. China has stopped importing Australian barley, meat, and wine. Coal and iron ore could be up next, although limiting those imports into China would hurt the Chinese economy. And the whole tactic itself only aggravates the Australians further and heightens their distrust of China. But to come back to Boise, for further signs of Idaho's interdependence with China, and returning now to the export of services, let's look at what's happened and why these numbers are in a quite steep decline this year. The reasons are not very far to seek. Idaho's main services export to China was travel. That is, Chinese tourists coming here and spending their money on hotels, sightseeing, car rentals, and the like. In 2018, as I mentioned above, Chinese tourists spent $56 million in Idaho. This year, what with the pandemic and travel restrictions that have flowed from that, Chinese tourist arrivals to the US have absolutely plummeted, 85% or more at least. Nobody's traveling. But in years past, some of those Chinese visitors might have been the parents taking their kids to school in Idaho. By themselves, education services, as the statistics say, tuitions, board, room and board, supplies, and so on from Chinese students brought $28 million in exports to Idaho in 2018. So if the numbers began to decline last year, you can imagine the sorry tales that the 2020 numbers will tell. And Jack's boss, the Boise State bursar, must be very worried indeed. But to give one hint of what the damage will be, last week, the Japanese media service Nikkei reported that in the 6 months of the year, from March to September, the US consulates in China issued a total of 808 student visas. For the comparable 6 months in 2019, 90,400 student visas were issued. So that's a 99-point-something% drop. The pandemic and the near halt to international travel are once again to blame, but so too are stricter US visa requirements and enforcement, perhaps the anti-Asian racism that has surfaced as the pandemic struck the US. And as you can imagine, the communist media in China have played that one to the hilt. To be sure, the pandemic disease is not a political risk, although how countries deal with it can create such risks. But tariffs, non-tariff barriers, visa rules, anti-American propaganda on the Chinese side, all these stem from political decisions that political leaders take. Now, all good business people are constantly assessing the risks to their businesses, whether plant disease or animal illness, a new technology or a new competitor, overall macroeconomic trends, tax policy, and so on. But the political risks that they would face may be the hardest of all to assess. In the US, business people, like all other citizens, can influence political decisions at the ballot box, in contacts with our elected officials, through the media, and by all the other innumerable channels that citizens of our democracy have. You might not always be happy with a political decision, and sometimes a decision can surprise you by its unintended consequences, but you at least know from experience how to deal with those risks and how to mitigate them. But how do you deal with political risks that are coming from a country as opaque to outsiders as China is? The Chinese regime does not make things easy. They have recently expelled more than a score of the very best American journalists who had been reporting from China, some of them for more than decades. The same has happened with Australian media. There are now no longer any Australian journalists in China, which puts the clock back to 1972. The Chinese regime thinks that kicking these reporters out will help Beijing to tell its story as it sees fit, through the party media like China Global TV, or those surly spokesmen who are praised in China as the wolf warrior diplomats. But for those of us who are interested in understanding what is really happening in China, those expelled American and Australian reporters have been a source of phenomenal, reliable information and great insight. And so their expulsion was a huge loss to our understanding. So reports from experienced and objective journalists and fine books like Richard McGregor's book, The Party, can be excellent guides to China and to understanding the political risks that it might present to doing business there or doing business with Chinese entities. Ultimately, though, there's no real substitute for actually digging into the place for yourself. By learning the Chinese language for all of its challenges, by working and traveling there if you can, by deeply studying Chinese culture, and above all, Chinese history, where history remains an excellent guide to China's present and its future. So in case you missed the message, that's a pitch to the students in the audience. And for those of you who are at Boise State, you have a model and a mentor in Professor Marr, and so you should pay attention to him. And with that, let me take whatever questions have come up.
Well, thank you so much, Bill. So we have, that's an incredible introduction, and I would like to go quickly to the questions, as I've had the honor of speaking with you in the past. So we have a question from Robert Daly. Robert, would you mind unmuting yourself and asking your question?
Hi, yeah, thank you for that really interesting presentation. It's been really wonderful tonight to listen to all this. My question is about the Biden administration and the old TPP that the Trump administration moved us out of. Should the Biden administration rejoin the CPTPP, especially given the fact that China has now successfully established the RCEP, integrating the region into the world's largest trade bloc? And how would that affect Idaho?
Well, it's hard to speculate on what a Biden administration's trade policy would be. I mean, it will take them from inauguration through sometime in first couple of months, really, to put together a team that would include the special trade representative and the Secretary of State and the Secretary of Treasury and of Commerce and so on, all of the players in Washington trade policy. And on the Democratic side, there was as much opposition to TPP in the form that the Obama administration had negotiated it, that I think it might be a little, and I'm just speculating here, it might be a little bit hard for a Biden trade team to come back and to join that in its current form, which is the CTP, which the Japanese have put together sort of from the what was left of the old TPP. I would think that the Biden administration on the whole will be more open to multilateral setups, multilateral negotiations and agreements. They will certainly, if you went back and look at Joe Biden's sort of foreign policy manifesto, which he published in Foreign Affairs a month or so ago, which I think he republished closer to the election, he speaks very much about reviving our alliances and friendships and restoring partnerships that have been either let to go or have been positively abused over the last 4 years. So I think you'll see that as a first impulse to, as Joe Biden himself has said publicly many, many times, to announce to the world and our partners, friends and allies, as well as potential adversaries, that America is back. I think there will be attention given to the WTO, not to tear it down, but rather to try to reform it. And there's wide agreement that the WTO in its current incarnation is in need of reform. And one of the reasons that's driving that view, I think, is that the Chinese have learned all too well how to use and abuse some of the provisions of the WTO. So, I mean, I think to the degree that you're likely to see a Biden team revert to these older patterns of a kind of rules-based foreign trade, to my mind, that has got to be good for American exports and generally the flow of goods and people. Whether I think TPP in itself might be a bit of a reach, but a return, first of all, to a sort of international civility with how we deal with our trading partners cannot help but be good. I mean, there obviously are barriers to Idaho exports into China and to other places, and to the degree that these international agreements provide sort of rules of the road, I think those tend to be quite helpful to the trading partners.
Thank you very much.
And I'd like to add to that, Bill and Robert, while we're waiting for more questions to come in. So please start sending in your questions. We have until 7. I think, in terms of, how the next administration follows up, well, I'm particularly interested in your thinking about this. I read a good op-ed today in Axios about how the new administration is dealing with a whole of government sort of approach to all of the policies that are coming out of the Trump administration. What I like to call is the alphabet soup of agencies, right? We have Department of Commerce and USTR, and we have Department of Justice, right, with intellectual property. We have Department of Education with student visas. You have Treasury, right? Sort of, you have a lot of players at various levels. So how do you think that can be coordinated? So not just talking about the, going back to previous policies, but how do you sort of get into, while maintaining this bipartisanship, still moving things forward without too much disruption? And I think it's a really interesting question.
Yeah, I agree. I think I've just actually, before joining this call, I was on another one with some of my NBR colleagues, and a similar question. We were talking to a business in Tokyo, and they raised everyone, of course, is curious about what a Biden administration would do on trade policy and defense and lots of other things. One of the NBR participants was my colleague, former Louisiana Republican Congressman Charles Bustani. And Charles's point on all of this was that in the very first instance, the Biden team are going to they're going to have to focus on the domestic, on the economy, and on the pandemic. And it will be already a struggle to try to balance the intensity of that and finally vanquishing the coronavirus with international dimensions. But they'll be doing all of this against a background in Washington in which, on both sides of the congressional aisle, sentiment has really swung quite sharply against China, particularly, of course, on intellectual property theft, on its sort of bristly defense, increasingly aggressive defense postures, whether it's in the South China Sea or in the Senkakus in the East China Sea, most recently on the Indian border. None of that stuff is going to go away. And so I think you will see Congress is not going to let any of that stuff go away. But as for how you manage all of this kind of whole of government approach, if there was one feature that characterized the Trump administration, it was a kind of top-down direction of policy, that the president would say or tweet something, and already a very chaotic bureaucratic machine would then try to translate that into policy. The Biden people, to the degree they are alumni of Obama or of Clinton or of the George W. Bush administration, I think are going to be a much more sort of bottom-up kind of group. That inputs would flow. It'll be a much more orderly sort of policy making, and so you would not have the FBI do something that the Defense Department didn't know about, and so I think, at least this is my hope. It's a more collegial, orderly process against a background where China's own sort of goals and style, again, particularly since Xi Jinping became General Secretary in 2017, I think that's all now clear. And the biggest casualty of all of that, of course, has been trust. Nobody trusts what the Chinese will do or say. I mean, as someone who, well, you were busy partying in Shanghai, Jack, I was slogging away helping to negotiate what became the Chinese WTO agreement. And, you know, a lot of that stuff, it's there on paper, and the Chinese put away their pencils and just walked away from it. All of these commitments about market access, particularly in services, over the board. So, you know, that's really taken the scales off people's eyes in Washington. And I don't think you'll see any major sort of attitudinal change, really. It'll be a matter of style. It'll certainly be a matter of mustering America's friends and allies to deal together with China, as the Trump people have tried to do that in the last year, 18 months or so as a follow-on to some of the sanctions on Huawei. But I would imagine a Biden team to be soliciting allied and friendly government input right from the start, and it would be that in that sense, you know, a more comprehensive and frankly a firmer way of dealing with some of this Chinese, call it competitiveness or downright aggression and frankly a lot of arrogance. So I'm not sure that really gets to it, but it's a stab anyway, and it's not even cocktail time yet.
Thanks, Bill, and I think that's very insightful. We have a question from Boise State student Will Jensen. Will, would you like to ask your question?
Hey, so question I had for you: how can companies like Micron continue to compete if China develops its own semiconductors? Do they have a long-term competitive advantage?
Well, thank you, Will. I'm not really a technologist. I'm sort of I still use a fountain pen, so, you know. My sense, the Chinese certainly would love to do that. That's why, you know, through the cutout, they tried to buy Micron. And why they steal stuff left, right, and center. I mean, this Zoom technology that we're using, Jack Marr can tell you, is actually a Cisco technology that's been, you know, I don't know whether the patent expired or whatever, what happened, but so the Chinese certainly have these ambitions, and it's very clear in the fifth plenum that just concluded, the fifth plenum communique. You'll see all the detail of that. Tons and tons and tons of money being thrown at semiconductors and other robotics and composite materials and lots of other advanced technologies. But the model never really seems to work in China. And I've never been sure why that is, whether it's a kind of what older business school people used to call satisficing. They get to a certain point and they figure it's good enough and we'll go on with that. So they're quite happy to steal a technology and apply it, but the technology moves. It's always evolving, and the Chinese model doesn't allow them to keep up with that. And so you see in their own, as I say, I'm no tech expert, but their own chip production and design and the machines for building them and so on are still many generations behind what we see here from AMD or from Taiwan Semiconductor and these other manufacturers. There's just not in the Chinese planned, quasi-planned economy that kind of freedom of inquiry and freedom to fail and all the sort of entrepreneurial stuff that has always given the U.S. and U.S. style free open market economies a kind of competitive edge to that. I mean, you just think about in the current 5-year plan, one of the big emphases was on electric vehicles, and there are all sorts of government subsidies being thrown at it and left and right. And before you knew it, overnight there were something like 1,500 electric vehicle manufacturers, and everybody, you've got this group of sort of chameleon companies in China. I'm sure Jack knows, he's met many of these in his time in Shanghai. These are companies that exist to follow government subsidies, and they'll go wherever the money is, there they go. They might not understand the first thing about the technology that they're actually dealing with. They have no core business other than cultivating the officials who are going to give them the money. I mean, I have a friend in Beijing whom I've known, I guess, for 20 or more years. He has no technical background whatsoever. He was a sort of lowly civil servant someplace, but figured out how to get this money. And in the time that I've known him, his core businesses have gone from solar-powered cell phones to coal mining in Mongolia, Gansu, and other places in the West, and then to solar power, because he figured he could put solar panels up on the land around his coal mines. He basically has no core business. And so, you know, that style, I just don't think is going to give them the sort of technological leads that they think their innovation policies are going to produce. As I said, getting a foreign technology, whether it's actually bought or stolen, it tends to put that technology, it sort of becomes a fossil, the way technology moves as fast as it does, particularly in the semiconductor manufacturing field. So, you know, I think if U.S. firms with their openness and readiness to experiment and so on, very easy access to capital. You don't have to deal with state banks here. You can just put in a call to your friends in Palo Alto. I just think that's still going to be a recipe for American success, really, and that the Chinese ultimately will be behind.
And next we have a question from Andrew Frenchick at Boise State University. Andrew, would you like to ask your question?
Yes, thank you. So I apologize for the wordiness of it. It's kind of like a two-part question. The first part is the Japanese government back in April set aside roughly 200 billion yen. And the reason for this was they were looking to move Japanese manufacturing out of China back into Japan and other Southeast Asian countries in an effort to decouple the need to be on Chinese manufacturing. Do we expect that to have a significant effect on specifically, let's say, Micron or other technological exports from Idaho to China as those manufacturings are moving and setting up shop in other countries that will need just like different infrastructure and computing assets? In addition to the second part of the question, I heard you touch on it. I don't know if it was briefly or more in depth, but we were talking about India and China having rather not the best relations right now, specifically over passages through the Himalayan mountain range. In addition to Australia increased their defense budget by 40% this last year. Do we expect the United States of America to be picking either a specific nation to back or to be slowly taking itself out of China's trade in response to the aggression the Chinese have been making towards India, in addition to the expansion of man-made islands in the South Chinese Sea?
Yeah, those are great questions, Andrew. Thank you. As it happens, the previous few hours, or actually 2 hours, I've been on one of these, not a Zoom call, but another. Well, it's actually the real. It was Cisco's WebEx with a big company in Tokyo, and indeed, there's a lot of concern there about Japanese exposures in China and how to use this 200 billion yen and probably more at the end of the day in supply chain relocation. And I don't really know Japan. I don't know that many Japanese businesses, but it seems to me for a good long while that in many sectors, not so much automotive, but others, the Japanese have had a kind of China plus strategy, that they've always had a sort of redundancy built in. So they've always thought about where else could we be, and as they've been thinking that, they have built out some of the ecosystems of manufacturing in Southeast Asia, particularly in Vietnam, and they are establishing a presence in India, and their foreign development projects now increasingly compete directly with the Chinese, whether it's building high-speed railways in Indonesia or in India for that matter, and telecoms and so on. So the Japanese have been thinking ahead on this for a very long time. If you were an exporter from Idaho, I should think you'd want to follow your customer. If it's a Japanese customer whose factory in Hangzhou is being scaled down because you're building up a bigger factory in Haiphong or Hanoi, then what had been an export to China would shift as an export to Vietnam. And similarly, if you're importing from China, I mean, the logistics have to be adjusted and so on. This is certainly a problem that port management and logistics firms, the FedExes and the UPSs of the world are trying to figure out how are they nimble enough to adjust to these kind of supply chain relocations. But I don't think those are really insurmountable problems. They're costly to solve, but not insurmountable for an exporter from Idaho. Sorry about that, Jack. As for the India-China thing, it's been simmering for a very long time. I mean, Andrew, it sounds like you know your South Asia history, and that they fought a war in 1962 that across what had been the British India had left something called the McMahon Line, and they fought that out. And when the ceasefire was called in 1962, they agreed on a line of actual control, as it's called. And for years, the Chinese have sort of nibbled at that. And then in June, they began taking bigger and bigger bites. And they still observe these protocols, however, that there are no firearms to be used up there. And so, but they did come. There was this brutal battle with like caveman weapons, in which at least 20 or more Indian soldiers died, and they appeared to have been pushed off a cliff into a deep river valley after having been beaten with clubs with nails in them and stuff like that. So the Chinese media have said virtually nothing about this, of course. The Indian media just exploded. And you can see the sort of anti-China sentiment that has just boiled up there, despite all of Modi and his own sort of domestically induced problems, the sort of pro-Hindu, anti-Muslim bias and all of that kind of stuff. Boy, the Himalaya border dispute brought it all right back. And so you immediately saw TikTok goes out the window, and all of these Chinese suppliers to Indian telecom systems are out. So the repercussions on the commercial side were almost instantaneous, and I don't see how the Chinese can fight back from that. Of course, the Chinese incursion also pushed the Indian security establishment ever closer to the Americans. And I know from another recent call I had last week with people in Washington that it happened almost too fast for Washington's comfort in a way. But they're quite keen to develop that relationship and include other partners, the Japanese and the Australians. And indeed, we've begun to see naval exercises that include all of those nations' ships. And we had, 3-4 weeks ago, I guess, Secretary of State Pompeo was in Tokyo for a quite high-profile meeting of the so-called Quad that involved Australia, Japan, the U.S., and India. And following on that, you then had a U.S.-Indian agreement on sharing of intelligence. So I don't see the U.S. so much taking sides there and trying to find a partner of choice, as much as being available to help these countries push back when the Chinese push them. And why the Chinese don't see how counterproductive all of this is I'm not entirely sure whether there are some domestic reasons that just are too unfathomable to figure out, or quite what. But I can see, and this goes back in a way to the first question about what a Biden administration might do. I think certainly to see an administration tending much more to American alliances and relationships abroad, and not singling out some people like Modi or little rocket man up there in Pyongyang for love letters and so on, while dissing people like Angela Merkel, even Malcolm Turnbull for that matter. So I think there'll be much more attention to trying to get these alliances revived, and actually, and just informal alliances all revived. There was another reading recommendation for you is if you can get access to the Foreign Service Journal, which is published by the American Foreign Service Association. This current issue has a fantastic article by George Shultz, who, as you know, was Ronald Reagan's Secretary of State for a long time, and really very much beloved of the Foreign Service, sort of the rank and file officers, maybe even more so than Colin Powell, and we all also love. And Schultz's article is just called On Trust. And it's about developing relationships and keeping them going. And he, when he was Secretary of State, he often said, diplomacy is like tending a garden. That you can't leave it untended. You have to rake and fertilize, and you have to, when the weeds pop up, you got to pull them out before they overgrow the place. Because you never know quite when you're going to need to call on a friend to give you a lift and a helping hand. And so it's maintaining relationships. It sounds quite humdrum, but in fact, it's really quite an essential feature. So I can see a new administration trying to get back to that old sort of George Shultz model of how you conduct diplomacy, and not picking favorites, not picking enemies for that matter either. If enemies want to come and let them, they can pick themselves, I guess. But anyway, I hope that's one stab anyway.
Well, we still have a couple of questions, but I think we're running out of time. And
oh gosh,
we've had a wonderful chat. I'm going to just finish with one final question I always like to ask for the students. We're talking about sort of the late 90s, looking 20 years into the future. How should they perceive? And we have a question from my colleague, Professor Hu, as well. Are these opportunities or risks? Should we look forward to further opening in the future, or scale back?
Well, I know where I'll be in 20 years. I'll be like my uncle who's buried in Ireland. We call him Pete. It's always the sort of 64 renminbi question, My own view, having lived 25 and worked 25 years in China, and know a lot of Chinese people, and half my family are Chinese and so on. I think the answer to that really lies with the Chinese Communist Party. And I think what's happened in the years since Xi Jinping became General Secretary has been really a sort of a step back. The rhetoric, the propaganda line that comes out is increasingly xenophobic. The creation of a personality cult around what we now call Renmin Lingxiu, the people's leader, has all sorts of echoes of Mao Zedong to it. And so the big crunch point will come. There'll be some, as you know, Xi has seen to the abolition of limits on his term in the party, in the state constitution, but all in the party charter. And so his current term should end in 2022, and there might be some some jostling around that. But basically, he's so squelched any opposition or purged them, put them in jail. And there's I don't think anybody can really stand up to him. And there's no obvious successor being groomed. And old Xi Jinping, while he's getting a little plumper, and he seems to slow down a bit, looks otherwise to be in pretty decent health. So I reckon he's going to go on at least till 2027, barring some accident or sudden illness or something. And then you start to see how stable this one-man rule really is. And I don't think it's going to be very stable. I mean, if there's one thing the Chinese Communist Party loves to do, it's to fight with itself. Factional fighting just defines the party. And it has more than just to do with Mao Zedong, who of course was a past master of that. And so I don't see, they can do all the 5-year planning they want. I think ultimately it's just not that resilient a political system. And the longer that Xi goes on in the style in which he's been ruling, I think the more resilience gets drained out of it. So I have absolutely no question about the goodness and the creativity and the energy of the Chinese people, and to the degree that we Americans and any other foreign people can come to know and understand and work with them, that's all fantastic. I think that's a perennially optimistic sign. But what happens, in the leadership compound in the Zhongnanhai and in the minds of some of these guys, I think just doesn't augur very well. Now, I mean, that said, no one, as Ray Dalio has said in some of his publications, no one has ever made money by betting against China. And certainly the record of the last 40 years, I mean, when I first went there, even as a foreign diplomat, I had to use ration coupons, to buy a cookie for my kids because it contained grains. Well, all of that, of course, has changed. And, the level of material prosperity is just extraordinary. And it's led to a lot of self-satisfaction and whatnot. But what it hasn't led to is any kind of political system that can, survive beyond the sort of current imperial court. I mean, this is why in 1979, 1980, 81, when Deng and his group finally came back to power and Mao was dead and the Gang of Four put away in jail and so on, they insisted on trying to keep together some kind of collective leadership. Even though they didn't always, Deng was a bit first among equals, but nonetheless, they made a pretty good effort at doing that. Kind of the natural checks and balances. It wasn't a democracy by any means, but a natural checks and balances. China's, it's a big, big place. And what happens out in Xi'an in the West is quite different to what's going to happen at Xiamen, on the southern coast. And so to have a collective leadership just kind of made sense. It's too big for one guy to deal with. And so that's what's been reversed. And I think that's not grounds for optimism, really, about what happens when Xi Jinping is no longer in a position to rule. So I mean, that's maybe we'll see that sooner than 20 years from now, but maybe you'll see it, Jack, but I won't.
Well, I certainly hope that we're all there to see an excellent ending. So, and it is a wonderful ending. I'd like everyone to let's give Bill a big round of applause. And Bill has some excellent publications which are available on nbr.org. Is that correct? So if you want to. If you want to hear
one snarkier than the next, And
on behalf of Boise State University's College of Business and Economics, we'd like to thank you very much for your time.
Well, thank you all very much for having me, and 继续为人民服务.
Okay, and thank you everyone for attending.
Thanks a lot. Right, bye.